Hey traders, what's going on? Jamie Saettele here. It is May 11th, 2016. What's going on, everyone? What's up, Masanori? How are you? So, last few webinars, we've had different themes. For example, concentrate on CAD a lot 3 or 4 weeks ago. Kiwi a little bit last week. And then we were looking primarily at pound before then. You know where all the longer term stuff sits at this point. So what I want to do is cover a little bit more of the shorter term stuff because I have a feeling that over the next couple of days, the trades, the opportunities are going to be a little more on the shorter term side. So why don't we just start quickly here with, with the US dollar, just the index. Put out a few charts here today on Twitter, and you know, the free piece I put out over the weekend, it basically goes like, yeah, kind of looking in the weeks, maybe months ahead, probably, thinking that the dollar could continue higher, and that this is the first leg of maybe a corrective move higher. But I do think the move's rolled over, and that the risk, the big risk, is to the downside. So the first place that I'd really want to be, dollar, full on dollar bearish, probably this trend. This is the US dollar, the FXCM one. So this is not like the euro heavy one. This is the euro, pound, Aussie, and yen one, where I'd really want to be more, turn kind of just straight out, just bearish dollar straight up, just be this trend line. Okay. I mean, the bottom of that was, was channel support, right? Big reversal. Okay, as we know, took out the highs from the 27th here. So we are seeing something of a pullback today. It's the first drop we've had in 6 days on this index. So taking out, what is that? So that's Tuesday, Wednesday, so Monday. So we're, more or less getting close to the weekly lows where we open the week. And so on balance here, we kind of, unchanged on the week here. So this is the first support. As you can see, just the middle here, the median line. A bigger pullback, or base, if you will, could result in something down here, 11,790. And I think that's actually pretty close to daily reversal support as well. Yeah, it is. The close is 11,785. Let's see where the retracements would be on this, the fibs. $11,790 for this 50% too. So looks like a pretty good spot. Again, so those are kind of, I think your spots, 11,790, and just this channel up here. So as that pertains to euro, looks like we do have an impulse down from the top. 1, 2, 3, 4 NFP spike, and then a 5. Sorry guys, I'm in the crappy building where I'm going to be losing sound every once in a while apparently, so um, I'll have to keep an eye on the sound. Anyway, 113.90, 114, and then looking for a run up to 115 or so. Okay, and here I'll scroll back and show you this, so this really combines. Get rid of all the lines and we'll go do this together in case you don't have these angles on your chart. So what we're doing here is we're really combining different methods of analysis, technical analysis, and really making it our own, right? So this is a trend line. Okay, and a lot of people would say, why would you follow this trend line? It was broken many times here and all this stuff. Well, think of the market like moving in three directions. Okay, a market can move up, can move down, or it can move sideways, right? So if, for example, on this chart is a daily chart, 114.65 basically, right? Resistance, 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 resistance. We've opened the month at 114.60 this month. Okay. So this sideways area between basically 108.20 or so, 108.20, 108.20, 108.20, all that, right? Sideways area between 108.20 and 114.60. Okay. Have you gone through 114.60 on the upside? Yes. Have you gone through 108.20 on the downside and back through it again several times? But that doesn't mean that you all of a sudden say, screw 108.20, I'm not going to pay attention to 108.20 anymore, right? So it's the same thing on a trend or on an angle. This is really nothing more than just a channel, just like this, sideways range is nothing more than a channel, but it's a flat channel. It's sideways. Okay, so it's the same thing. So this is just tilted a little bit each way. This way if it's up, this way if it's down. Okay, so going back to our chart of euro on the 4-hour, these are the angles that we're really following right now, right? At least in the short-term picture. And I do think eventually that there's going to be a giant breakout on the upside in euro, and that this thing's going to go to 123 or something. But I do think that after last week's key reversal, weekly reversal, that you do see something of a couple of weeks maybe to form some sort of a flag pattern, whatever, which means that there's going to be trades in both directions. Okay, so this is the angle we're following, that I've been following at this point. Okay, so it's really like right there, right? Getting all that stuff in, and then down here. Okay, so this is essentially the levels that we want to trade. Okay, so we've got slope analysis here, pretty simple, right? This is the angle of influence on the short term. If we take a look at our long-term chart for euro, this is a monthly chart. I mean, you can see we're at a pretty big spot. This is a weekly chart. You can see we're at a pretty big spot. And the big support looks like it would be down here if you get to it, right? Down on the one. What we're looking at in the near term is basically this. So combining our slopes, oops, sometimes it erases when you go to a new time frame if it's not, doesn't go back far enough. So we've got our slope lines in play. All right, now we're gonna throw in some Elliott on this, right? And again, we've got a 1, 2, 3, 4, 5. You can see it maybe better in a line chart. Okay, but we do have a 5-wave move to the downside. The implication being that, you know, the downside's not done yet. And I happen to agree with that because, again, we're coming from a really big resistance area. So we're basically looking for a corrective move to the upside. And the levels that we'd look for it to fail at naturally would be, well, in Elliott, you got the former 4th wave, which is actually the NFP high at 1375. We also like our month opens, that's 1460. Then you've got the 50 to 61.8 levels, 1487 and 1517. So, you know, it could be any of those. I'd probably go, you know, just basically 115 or so, just because that's happens to be the slope level too, right? So what, you know, to trade it, be looking to buy a dip as maybe a B wave into 1390, and then looking for additional strength in euro higher. So a pullback from here would be, you know, kind of ideal, I guess, just because you do have the you have the US dollar index, this index already at support as we've already gone through. So again, if we get that pullback in euro, 113.90 week open price, 114-ish, whatever, that's really your support. So, you know, for the rest of the week, you know, you might end up trading 114 on the long side to 115 or 114.75, sorry, 114.75 to 115, and then actually look to short up there. Okay, that's how I'm you know, moving forward on euro dollar at this point. So that pretty much covers euro. Oh, looks while I was talking, dollar yen spiked down into 108.40, getting awfully close to support. Sorry, I had to take a drink of iced coffee there. All right, let's look at pound, which, as we all know, the Super Thursday, so-called, is tomorrow. And just looking up headlines on pound dollar, see what everyone's thinking on this. I'm pretty bullish on pound. Again, tomorrow you've got, okay, BOE rate, BOE asset, inflation report, you know, and then so they call it Super Thursday, I guess, right? Because you get all this stuff at once. And it's 7 a.m. here, New York time. So, you know, wherever you are, just be aware of that. And what I'm looking for, again, is the same, you know, is this retest, if you will, into 143. Looks like it's like 143.30 or so. You know, to pound, give it some room, 143 to 143.50. Give it, you know, give it a range, what have you. But with cable, I think this really could be the surprise for the, you know, for a sharper move down in the dollar, maybe. I just like the reward to risk big time on cable. I think that everyone is freaked out on Brexit and been talked about, and yet cable's acted really constructive, right? And so if there's going to be an upside surprise, it's a pretty good way to do it. And if we look at cable, bigger picture charts, like the weekly chart. Love this weekly chart. Okay, again, just real simple stuff here. You know, what's the dominant angle on this chart? If we just draw a trend line here, you don't think there's a whole lot there, right? It's just a trend, only touches 2 points, right? It's not really, you know, wouldn't really be a valid line, so to speak. But if we take this thing here, remember, this has really ended up being, you know, support and resistance, you know, on both sides of the market, right? You could kind of put it here too. So you've had support resistance. This obviously ends up being the exact same angle as the neckline for the head and shoulders, which is this, right? Got the head and shoulders going on right here. So, you know, shoulder, head, shoulder. Right now, if this head and shoulders is going to end up playing out fully, you actually end up with a target all the way up close to 152. I don't know if we get up there. I'd be looking for support here, you know, again, 143.30, 143.50, and then I'd be looking for a move up into 149 or so, which is where the trend line is. So I don't know, ultimately, you know, I don't know if we get all the way up to 150, 152. Okay, but whatever. The focus right here should be on, you know, really getting into this trade. So I'm willing to give it a lot of room because you know, final flush down here on BOE and then take it higher. So that's, you know, that's that. I mean, that's cable. Look at some other charts later, like pound yen too looks really good on the upside. At least huge reward to risk, you know, huge reward to risk ratio. You know, for pound dollar and pound yen. Pound. See, I have my notes here. And I wrote for pound. I'm in love with 143.30/50. Okay, Aussie dollar. Probably know what I'm thinking here. Again, I think the daily chart does justice on this. You know, this is the chart from earlier from the weekend. Looking for a move up into 75 or so, 74.97 to 75, but I want to be long for it. But like, you know, I'd like to see the 50 line, the line that's the midpoint line between lower parallel and the median line. I'd like to get that in order to buy this, right? On the upside, you did have some touches around there, right? And some pauses, if you will. The market would pause around that level, bounce off that level. You know, same thing on the upside. You had a lot of support down here, a lot of support. Really took off from that area. So, you know, we'll see how things want to play out near term. This picture, you could potentially see something like this. Here's Aussie. You could potentially see something where we get maybe a move like you know, if I draw a channel here, a short-term channel, this could end up just being a flag of sorts, a little bear flag. You know, so you could end up getting resistance up here. You know, in the 74.15 area, which is also the former low. That's back here, 74.15. What's that? The low from March 16th. Okay. So basically 2 months ago, you could end up maybe trading up into that region and then trade lower into the 50 line, okay, before you get a bigger bounce. So that's certainly a possibility. You know, it kind of no man's land right now. You know, it's if it was 74.90, it'd be a sell. If it was 72.80, it'd be a buy. We're right smack dab in the middle of those two spots right now. So yeah, we'll keep an eye on this. You know, on this development. You know, up here. Could get resistance up there. You'd like to see if you do get a move up into this area, you'd be looking for like an hourly reversal or something, 4-hour reversal in order to get short. Kiwi, biggest bounce since the move lower started. Looking for this Kiwi bounce to stop in the 68.20s or so. We opened the week at 68.21. You've got the weekly, the yearly open at 68.27, along with some good lows down there too, right? High from this week on Monday is actually 68.47. We have basically gone there. We've gone to 68.45. You know, I mean, for all the reasons mentioned, I like Kiwi lower. It's obviously quite choppy. You know, I don't know if the break-even stop will survive or not. I do think Kiwi is heading lower and potentially a lot lower. I just, you know, you get some big rips out of nowhere, seemingly. You know, like for example, today's you know, rally. Well, it rallied last night. Yeah, the Kiwi was at the New Zealand economic stability thing where, you know, Wheeler speaks and whatnot. And this is kind of interesting. That, you know, market traded up to 68.20 on that last night during Asia. That came off, and then, you know, it was like 67.80 or something when I saw it this morning, and then crude oil inventories come out, and crude oil inventories, there was a draw instead of a build, and you got it just a total rip, obviously, in crude oil. I mean, it went up close to $2, I think, and it's up over almost 3.5% right now. And you know, Kiwi has nothing to do with crude oil, but Kiwi ripped on that too. So, you know, it's just kind of a sell dollars thing. But whatever, I like the short side on Kiwi. You know, I'm looking at this as basically an entire channel right here. And, you know, even if the broader move is higher, and I still don't know about that, even if it's higher, you know, you got the channel support for it is probably down here, right? So, you know, even if this is a much larger bottom, the support's down low at lower levels. But anyway, what I wanted to show you on this too, last year, of course, you had a huge decline that really started at the very end of April, okay? And we were short and ended up getting stopped out on this rally, okay? And then what happened was this. We got trailed out, okay, for a decent gain, but it could have been a lot bigger. Anyway, the dates here are really similar, and this speaks to the seasonality, you know, in Kiwi, and you know, Kiwi, it tends to be weaker in May, and you know, May is one of the worst weeks, or sorry, worst months of the year for Kiwi. Anyway, so you topped last year. You can see here on April 29th. Okay, here was the drop. This was May 13th, which was, guess what? That was the That was last year's stability thing from Wheeler, right? The financial stability speech and papers were released. So that was the same exact day 1 year ago. Today's the 11th, okay? But last year that was a Wednesday, the 13th, and that was when that happened, when Wheeler spoke. Guess what? Kiwi ripped for like a day and a half, okay? And then started to fall apart again. So is something like that going to happen here? I don't know. It could, right? It's just funny how that works. You know, the market first decline this year. We ended up top. Well, I guess we did top back here, but you know, really we kind of double topped it with on May 3rd. So you could put the top on May 3rd, top on April 29th. Rally on the Kiwi thing with Wheeler, you know, speaking here on the 11th. Last year was on the 13th. Maybe we come into a high tomorrow. I don't know. So with that in mind, you know, where might this rally stop now that we've gone through 68.20, 21.27? Well, if I look at it from the, you know, kind of a corrective two equal leg standpoint, two equal legs would be 68.89. So I keep that in mind. You also have the 50% retracement at 68.84. Okay. So 68.80 area, 68.80s does look like a potential you know, resistance area for the New Zealand dollar. If let's see where this goes in. Where do that support came in? So you did have support on this line. You see here? Okay, here. Actually, this is a good one. That actually is just above here. It's not far away. And you get a 50 line there. So that would be like 68.60s. So yeah, I'd be looking at 68.60s to 68.80s as a level that I'd like to see cap this rally, you know, at least, you know, over the next day or so, in order to maintain, you know, good downtrending move, excuse me, in Kiwi dollar. And again, I'm targeting on this case, even though I'm of the mind that Kiwi could end up going a lot lower, I'm just looking for 66.20s on this move from up here. Okay. Again, you've got the double top target up around that region, or down around that region. You also have 618 of the rally from January is at that region. And if you get there over the next couple days, you have a lower parallel and slope confluence as well, right? This is just the trend line down here. You know, same channel lines, right? But this is an internal one extended from the base from February, ended up being support in March as well. So could be support at some point. Mid-February, February 16th, March 16th. Maybe we get a mid-May down here. So that's Kiwi. Dollar yen. Talked about this one last night, of course, in the post, and we were looking at, you know, getting a pullback from up here, or up near where we were. Yesterday, market had traded up into this area, and we were talking about getting a pullback from near 109.48, which again is a 1618 extension of this rally. So if this is a 1, 2, 3, you know, it fits as far as the you know, the wave relationships you know, go, right? This pullback being 4, you'd look for it to finish around 108.30 or so. I think you actually have, so let's see what wave 4 would be. You would get 108.24 for the 38.2, okay? And Obviously, you have slope stuff here too, and this slope line. Okay, we're just going off the highs from December 17th and January 29th, and those slope lines have worked out fairly well. So this one, the extension here, you can see it does cross through a number of inflection points, right? Most recently, support back here on the 17th, resistance here on the 14th of April, even little ones like here, the 19th, here the 21st, etc., etc. Okay, and then here we are with that same level. So basically, again, looking at 108.30, 108.40 to hold support in dollar yen in order to take this higher. Now let's say that there's like some sort of a complex corrective move going on. If that's the case, then maybe you do get a move down into 107.83. Okay, and I have this bold, this 50-line bold, because you can see it cuts through here, cuts through all these levels. So maybe you do get a move down into that region. I don't know. Basically, I'm thinking buy the dip in dollar yen. Because we have come off some really big levels. I mean, let's see, dollar yen. Go to the long-term chart real quick, just to keep it fresh in the mind. Your weekly chart, right? 2002, 2007 line holding. This was a chart from the weekend. Is that it, or is it one more dumping? Turned up nicely, so I'd be looking maybe at looking higher here, at least for maybe a run at 110.66, which is the lows here, basically the prior breakdown level. For dollar yen. Okay, pound yen does look like a better trade to me. As far as the yen cross is concerned. And why don't we just look at that now? Let's look at the Nikkei first, though. So here's the Nikkei. Okay, this chart, this is a 4-hour chart, and we're going back to the highs from last August. Okay, and what you see here, okay, is a downtrend, obviously, from that point, but it's an uptrend from this point, from February. Okay, and that's important because you have a divergence, a big divergence in place between the Nikkei index and the dollar yen exchange rate. Which one's right, which one's wrong, I don't know. But what I do know is that, when you get these divergences, I mean, they do tend to come back in line. Okay, and so what we're seeing that happen, it seems like, maybe now. Okay, you have higher highs and higher lows in the Nikkei. Dollar yen, though, came into this really long-term support region just above 105. Well, into the 105 handle, but not quite to 105. And has turned up rather sharply and potentially in an impulsive manner. I say potentially because it has yet to make the 5 waves up. If it does, then you have more kind of information at hand, if you will, that dollar yen has indeed made a pretty decent sized an important low. So for the Nikkei, remember last week on NFPs, I was looking for a move down to here for this kind of 5-wave move to the downside. We were looking at 15,600s or something like that to get long dollar yen, pound yen, whatever. Of course, it ended up just turning up and moving higher. But so I would still watch the same chart and the same slopes, though. Okay, so as it is right now, you can kind of see, I'd watch this stuff here. So we're looking for this dollar yen support. If the Nikkei comes in a little bit more, maybe 16,320 or so. Currently 16.5, so it would be a decent sized drop, 180 more points or so. But Nikkei right now, futures are down 265 points. This thing moves. So I'd be looking for support on dollar yen and on the Nikkei index on those two levels. Okay, I just mentioned. So for the Nikkei, it's what did I say there? 16,300 or so, and then dollar yen talking about basically 108.30, which is 20 pips from here, and then maybe 107.80. I don't know. We'll see. But same idea on both. Look for weakness to buy. Okay, so there's that. Pound yen. Let's go there. So I'm looking at, want to buy, about 100 pips lower in, or a little more than 100 pips lower in pound dollar. And then dollar yen, we could have support pretty close to here as well, 108.30. So would make sense that I want to look at buying pound yen too, right? So if we finally have made some sort of a low in pound yen back here in April, this head and shoulders pattern that's been going on since February is the pattern that's going to launch this thing up to the mid 170s. Here was NFP. We dipped below that, broke it, came right back. If you remember, we were talking about that heading into NFPs. The market has turned up sharply. I love the fact that you had this old former trend line right here, basically provides support. Okay, you do have an impulsive advance, 1, 2, 3, 4, 5, maybe getting a little A, B, C action. So 618 would be 155.28. 155.80 would be the 50% retracement. Let's, for fun, see what we have. What would we say? 143.50 for pound dollar. Let's say what dollar yen at 108.30. That puts you at 155.41 if they're both there at the same time. So let's see what 107.80 would be. That puts you at 154.70, so it puts you actually pretty close to the month open price. So same idea here as with pound dollar and dollar yen, which is kind of looking to buy weakness on pound yen. And again, Super Thursday tomorrow. Just don't forget. All right, so we've gone through that stuff. Pound yen, by the way, I do think pound yen could eventually trade. It's the daily chart. I'm going to face some stuff here, but eventually this thing does, I think, have, there's the possibility that this does trade all the way up to 174 or so. That's just a trend line, and it happens to intersect basically your head and shoulders target in mid-June. And I love the narrative of that happening. Here's why. You've got a head and shoulders target intersecting an upper parallel and a trend line all around when the Brexit vote comes in, right? Everyone's so negative on this thing, freaking out about it, that it would just be perfect if that were to rally into it instead of decline into it. And then it would be fine, and then you'd sell it. Stuff seems to work in almost the opposite of what people think. Really long-term monthly chart, we have retraced half of the rally from 2011. All right, so we've retraced half that move. You do have highs up here from 2013. The 2000 lows at 148.20, which is 110 pips from the 61.8 level. So, if the market if this pattern fails, the next huge level on the downside is probably not for close to 1,000 pips from where we are right now. So, just a heads up. Let's look at Dollar yen. We want to look at dollar CAD, obviously. Dollar CAD. So finally, this thing is turned over some. Remember, we came from absolutely wonderful support, you know, I said I wasn't going to look at long-term charts. Well, the dollar CAD one's too good not to look at. So median line back to 1986 high. Okay. I mean, like literally to the tick, this thing hit it and rallied. And I think that resistance, I think we're going back to 138. Okay. I mean, it would just be perfect to go back to 138. You know, it's been a big resistance level. This median line has been huge before. And get back there. And then you can resume your dollar downtrend against Canadian dollars after the blow off top that we had in the beginning of this year. So here we are. 128.30 actually is what the market says right here. And at least current market, I should say. Here's the weekly chart, right? Interim resistance might be 132, 132.95. And again, for us, we're getting this pullback, and really, I think it's pretty clear. The 128, you know, 127, low 127s, maybe mid 127s. I don't know, 120. Let's call it 127 to 127.50. You know, you can move it down there. You see that little base there? It's like 127. Right, but 127.16 is that high from that 1 week. 127.40 is the low from that 1 week going back. And so we're finally getting this pullback after taking out 130, 128 or 129.89 to be specific. But we're finally getting this pullback, and you know, looking for some sort of a, you know, I guess looking for this to continue from here for the most part. I mean, it could get pretty choppy, right? So just, you know, I wouldn't really do a whole lot here other than just quick scalps, like for, you know, a couple pips here and there. I wouldn't want to do a whole lot of trading until you get down into 127, you know, 127.40, 50 or whatever, right? And so that support down here, it could happen tomorrow, could happen on Friday. But yeah, that's where I'd be looking as far as support is concerned. And that is dollar CAD. So just, you know, really the same thing we've been looking at for a while, finally getting some of that correction, and we'll look to buy, you know, buy the dip into it, given the major long-term support that we're coming off of. Okay. All right. So I have a request to look at EUROCAD, and I certainly will. Just give me a moment, real quickly, to look first at. Let's look at dollar Swiss. Oops. So dollar Swiss. Okay. Remember, dollar Swiss has come off just a very long-term level. Okay, the trend line, called an internal trend line, it goes off of lows from May of 2014, May of 2015, and surprise, surprise, May of now 2016. You do have this wedge possibility going on from the highs, in which case you could get a really bullish outcome. But near term, and what is useful to us at this point in time, is going to be identifying support. And much like I think, you know, the resistance, you know, for euro is probably somewhere along the lines of 115. the support for dollar Swiss might be somewhere along the lines of 96.50 or so, right? I just say that because you do have a lot that's going on here. Okay, 96.50, 96.60. Okay, lows back to February, really. So, you know, February. And again, this speaks to the whole idea of we talked about with slope, right? Just because 96.50 didn't hold, it went through here. Does that mean you paid attention? You dismissed it? No, it was pretty good after that a number of times. Okay, even yesterday, or sorry, last week, that was NFPs. It was the low was 96.46. So, you know, if we can ease our way down into 96.50 and preferably somewhere on this, you know, on this slope. By this slope, I mean this line right here. You know, is it somewhere maybe on there? Maybe you see those touches there. Okay, didn't quite get it there, but you can see that 96.50 region would come into play. Again, it looks like throughout tomorrow, basically, is when this happens. So that's you know, what we'd be potentially buying into 96.50 on dollar Swiss. You do have again a pretty big upside test for this up here, right? Up in the, it looks like the mid 98s at this point. It's just the trend line that goes off the highs here from January and March. But trading focus for me is going to be on this 96.50 region. Okay, that has gone through the majors and stuff I want to look at. I do want to look at another cross, another few crosses actually, but let's look at EURCAD. Had a question or a comment or I should say a request to look at EURCAD. Okay, EURCAD. EURCAD, this is the 4-hour chart here. I think the last time we had written about this was to look at maybe, let's find the last time we wrote about EURCAD. We have EURCAD. I really doubt it's changed since last week. EURCAD turned up sharply. Okay, so support. So this is the thing we were looking at last week. That was a 60-minute chart. This is the same one. Same. Yeah, it's the same thing. Okay, so basically, watch for support here. I mean, it looks like it's 45.50 or so. Okay, you have 5 waves down. This is probably wave A right here. Probably get an A, or more like A, B, C, right? So, yeah, it looks like even those former lows are over there. There's a lot of stuff going on here. 45.30. Yeah, so that's where I'd be looking at support for this on EURCAD would be about 145.30 or so. Basically, if you get below here, okay, 46.20, and you complete a short-term double top, but wave structure suggests that you actually would be on the lookout for a low. All right, so the first level I'd watch for a low would be 145.30 or so, just because you've got the former lows there from back here in March. But bottom line, I'm following this slope right here, which goes off this spike low. What's that low on the 13th, April 13th? The high here on April 21st. Let's see. You've got a median line down there too. Here, let's clean this up so you can get a fresher view. All right. I'll get rid of this too. But so we're looking, the market's going up back up to 140, 120, I think, right? Former fourth wave up here. Remember, this parallel right here, okay, this parallel be looking for some support on this as well. And if you just take a broad view of this chart, right, and you can't get this by staring at a short-term chart. This is a 4-hour chart, but we have a broad view of it. We're looking at a big screen. Okay. And look at the inflection points that you've seen, right? Big moves off of these 45, 30 area, right? Maybe then right here. And it's also, again, that's also the median line, okay? You can see here that that's the median line from this entire move. So, yeah, 145, 145.30 looks like a pretty solid point to get involved in EURCAD. I'd mark it down on the chart here. So yeah, 145.30. I hope that helps. But 145.30, am looking eventually towards 140 or sorry 150.20, 150.40 or so. So the chart that I wanted to show you that a different cross, Aussie Kiwi. Don't forget about this one. Okay. See this trend line here? Okay, back to the July of 2012 and March of 2013 highs. That trend line, again, cuts through all this stuff. And, why pay attention to it? Well, because it might be huge again. And it's just below here. It, is just below where the trend line is that connects the lows. But you kind of have an area where if you're going to turn up in Aussie Kiwi, if you're going to finally turn up at some point, then you'd be looking for it to happen pretty soon because of these trend lines. So, here's the same chart, same trend lines. So just heads up there, looks like it's 107.30 or so, 107.20s, 30s for monthly spikes last month in, oops, let's see, I don't have Swiss in here. Here we go. Euro, pound, and pound Swiss. Surprise, surprise. So if we go to our, here we go. All right. So you can get some pretty good turns on this, and you can get some really bad signals, but that's the nature of the beast, right? So monthly J spikes, I mean, this is the S&B intervention, January 15th. I wouldn't really pay attention to that. Did have one in October 2014. You had one, obviously, the all-time low in September of 2011. Wouldn't have worked. Would have had a couple of these that would have worked okay and not worked okay. And then we had one last month. So, you know, you could have a huge, ascending triangle in pound Swiss. It's very long term, obviously, but we're talking about the potential for a move and a generational type of reversal. Pound higher, Swiss lower, dollar Swiss higher, pound dollar higher. Crazier things have happened. And then of course Euro pound, basically the other side of this. Here's Euro pound weekly chart. This thing's coming to resistance as well. It's also coming to support. So we've gone from resistance to support. But I do think Euro pound could end up rolling over as well. You could end up having a topping pattern here either way. Pound Swiss is the one that I really kind of want to keep in mind just because of my thoughts on the Swiss franc on a longer term basis. But, not trying to tie up capital or anything here, but look at this. Here's a daily chart, right? Just kind of keep abreast of this, keep an eye on this. Like here's this, let's go to an hourly chart on this. Okay, 4-hour chart. I mean, you've got a heck of a move higher. This is an impulse. Maybe you get an A, maybe this is a B, maybe you get a C, right? Maybe we end up with a big buying opportunity in pound Swiss down at, 137.20. Okay, I don't know, but this is something I think that I would write down as far as the level is concerned. 137.20. Heck, it's even the lows from over here. Okay, 37.25, low from February, low from March 24th. I've already retraced 50% of it, but yeah. Let's look at, before I go, I do want to take a look at, gold, silver, and crude real quickly. Here's crude oil. Again, this was the inventories report that came out today. Crude's up over $2 off that level before we traded, on the inventory. So, another thing to watch too. Obviously crude is what, 75 cents, not even from its high for the move. So, you're going to get a divergence here where dollar CAD, if crude goes to a new high, which at this point it probably will because it's not very far away, you're going to get a divergence where you have, crude at a new high and dollar CAD not at a new low, right? I mean, dollar CAD is so watch that dynamic, okay? With crude oil and with dollar CAD. And let's look at gold real quickly. Oh, this is silver. Let's look at gold, sorry. So gold, okay, remember here's a chart going back. That line, the upper parallel was resistance. We broke through it. It was kind of support last week, but not really. I mean, you traded around it, went through it, then snapped below it. Guess what? We just came right back, and it's acting as resistance today. So, look, I'm a gold bull. I think gold's going higher, but 1307 is a really big level. We traded last week to 1303.60. Pretty damn close. Okay. Gold, can pull back, and I think it can get all the way back. I wouldn't be surprised to see it 1190. Okay. So, you hear all these guys, these long-term macro guys. That's fine, but they can sit there and they can withstand giant drawdowns because they have the pockets to do so. So gold, if you're buying it here and it goes down $100, that's not really any good for anybody. Okay, as far as what we're concerned. So yeah, gold is bullish. I think it goes a lot higher, but we're getting into a level where it could experience, and it has experienced, some slowdown and some pullbacks. So just heads up on on the risk of pullbacks. And by the way, you have a new speculative record long position in gold as per the COT figures, and as that just can't last. So there's going to be some washout at some point. On the long side. I mean, it's a crowded trade. So, and then finally, let's look at silver. Silver continues to act really well, bounce from this median line, You do have what looks like it could spell some problems for silver over the next, couple of weeks potentially. I mean, you've got this, we just rallied up into this level and reversed off of it to a T after hitting the median line to a T. So, it could be that this takes silver lower, but, for the much longer term buy, of course, on silver. So just kind of a heads up on that. Okay. And that's about it for me. I'm wrapping it up here. Get this archived. Everyone, hope you enjoyed the webinar. Thanks for attending. Masonry Euro Pound. Sure. So Euro Pound, didn't we just look at it? So Euro Pounds has come off long-term resistance. Okay. It actually came into support though as well. You can see that support being 77.54, which was the old trend line. So it's cool you can be bullish Euro Pound here, and you can be bearish Euro Pound here because you're trading between two giant levels. So, the way I'm looking at this, as far as my bullishness on pound, I'd actually be thinking that this breaks down rather than higher, but that's just an opinion and or a gut feel, and it doesn't really mean anything because these can be totally wrong or right. It's not really about that. It's how you manage the trade. But if I go to a short-term chart, you see that this low at 77.54 is also, it's really 77.35, is also a median line. Okay, so I'd watch price action up here. You're at former 50 line, which was support at one point, acting as resistance. So pound might tighten up in this region, but to me, it's bearish below 77.35. And then obviously, if you break through this, because that is a trend line that goes back to 2008, then it's quite bullish. But with me coming up into this trend line, I'd be more bearish up here, although a little higher. See where the 61.8 is on this. Hold on. Just above 69.70, but yeah, not a super strong opinion on either side, trading between two really big levels on Euro Pound. but they are very clean long-term levels. You also did have, this is a monthly chart, you did have a big reversal bar last month. So that to me actually is more, bearish than bullish, this kind of bar at resistance. Okay. All right. So I am really going to wrap it up now and get this archived and up on the website. Again, thanks for attending. Obviously, Mike's back, which is great, and he's doing the the morning webinars, the short-term stuff. So be sure to check him out in the mornings. Okay. All right, everyone, have a great rest of your week. Thanks. Bye.